Hey everybody, Jim Malone here. It is Dallas Trading Floor number 118 on August 26, 2020. It is a Wednesday, and wow, the market is once again moving up. I mean, whew, this is just something. I can't keep it down. It seems like it's just up, up, up. So it's got to end sometime, but at least we're making some money during the time that we're letting it move up further. And everybody on TikTok, hello, how are you? By the way, if you want to see the charts, we have them over here on YouTube, youtube.com/Dallas Trading Floor. And so here we go. Here's the general chart direction. The market is, once again, it seems like it's a broken record here, but the market direction is up. It's up 1.57% when this slide was taken, $11,646.84. Wow, that is amazing. That is amazing. The S&P is up and the Dow Jones is up, and everything is a confirmed uptrend. So, not a good time to be short. Definitely a good time to be long. Lots of amazing stuff going on right now in terms of the market. I just can't seem to. I haven't seen it move like this in a long time. So, don't rock the boat. It looks like good stuff is happening. So here we are with the Spider, the S&P 500. This is the world's largest ETF. Many people have their entire retirement in this. It tracks the S&P 500, and it is a huge fund. It's worth approximately $220 billion. Matter of fact, there are many countries out there that don't have a GDP that big. So this is just a massive amount of capital, and it's up $3.16, almost 1% today. Wow. Amazing. I thought it was really great when it was at 275. It's now at 347. Wow. I think it may go over 350. That would be just remarkable. If that is the case, we are definitely seeing what they have termed the melt up. We are melting up. All this capital that's gone into the economy, well, it's coming into the economy, but it's coming in a strange way. It is coming in through the stock market. So a lot of this stimulus is moving to the place that it can move, and that is the stock market. So right now we are moving higher. So don't rock the boat. Also, it looks like the QQQ may end up at 300, which is unbelievable. Currently, it's at 291. It was just 275 just a little bit while ago. It's up $5.76. There is just a surge of money coming into the tech sector. Just absolutely amazing. Absolutely amazing. It's just moving into the tech sector, and there we go. That's why the QQQ, is doing so well. And of course, what the Qs are is that they are the Nasdaq 100. These are the largest 100 stocks that are in the Nasdaq index. And of course, it includes Microsoft, it includes Apple, it includes all the FANG stocks are in there. Now, what's very interesting is some of the other stocks, like the Dow Jones, include some of these stocks that are in the Qs. For instance, in the Dow Jones, you have Microsoft, you also have Intel, and you also have Apple. Pretty interesting. There's been a kind of a mix, kind of a rejiggering of the Dow, and we're seeing Salesforce go in there. We're also seeing Amgen go in there. So the Dow is definitely changing. There has been some rumor, and I don't know. It's never probably a good idea to talk about rumors. But there has been a rumor that they want a car company in there because, as you know, there hasn't been a car company in the Dow since General Motors. And General Motors went bankrupt, believe it or not, in 2009. You wouldn't know that because, there's all these Silverados and Chevrolets driving around, but it really did. Look it up. Google it. General Motors went bankrupt in June of 2009. And there hasn't been a car company in there since, and there hasn't been a steel company there either. So, it's the Dow Jones Industrial name only. So, who knows? Tesla, which is not in the S&P 500 and not in the Dow, it may go into both. So we just don't know what's happening. Maybe the reason that they're splitting the stock is for that reason. I don't know. I have no insider information whatsoever, and I want to reiterate that. What's been so strange about this is that even what I consider marginal stocks have done well. As a matter of fact, I just doubled my position in the small portfolio in a stock that I would have, never looked at a year or two ago, and that's NIO. NIO. This is a Chinese automobile manufacturer, and I'm really not that excited about it, but I bought into it because look at this chart. Look at this buy point. There you go, and it's in the small chart. So, the small portfolio. And if you want to get a look at my small portfolio, super duper easy. All you have to do is go to all you have to do to get a look at that is to send me some information so I can send you a link so you can look at this. And the link can be got by going to DallasTradingFloor.com and putting your information into the little box at the lower right-hand corner, and I'll send you out a link so that you can see the portfolio. And you can see my watch list, and maybe that'll be of some interest to you. See how I'm trading things in a relatively small portfolio, because this is a small portfolio. I have other portfolios as well, but I like trading this one because this shows you that you don't have to have a lot of money to make money in the stock market, believe it or not. So this is a little portfolio that I've been trading, and very successfully. And it's available. You can definitely see it by going to www.dallastradingfloor.com. So let's take a look at the one that I think everyone is interested in, and I sure am. As I said before, I think that, we're going to see a movement in Tesla up to its peak, and I think it's going to peak out about Thursday or Friday, but, I've been wrong before. But it certainly is going up today. This is Tesla just a few minutes ago. It's up $141.23. That is phenomenal. And I think this crescendo will be probably right before the split. So let me kind of show you how I'm going to be trading it. So here it is. Basically, we're right at this point right now. We're almost at the crescendo here, I think. I believe that that's going to be prior to August 28th. And of course, we're at August 26th. So we've got 2 more days for this to happen. And then I think once that happens, we will see it move down as it moved on the 31st. I think we'll start to see it move down. And then, of course, I'm going to be buying it all the way up here. So I'm going to wait, until we've passed the split. I do think we'll be moving off the ladder a little bit, and we'll hopefully move up from there again. So that's going to be how I am trading Tesla. For full disclosure, here is a copy of my current holdings. And you'll notice that Tesla isn't there. Well, I sold it. I sold it on the pullback. So maybe I sold it a little bit too early. Who knows? But I'll be back in on the other side. So that gives you kind of an idea of how I'm trading. And of course, if you want to get all this information super duper easy, sign up for our action trade alerts. It's all at www.DallasTradingFloor. So there we go. So let's look at the comments. Hey, Jim, are you selling GG before earnings? You better believe I am. You better believe I am. So let's look at DG and let's see when we are going to be selling this bad boy. That's a very good call. I really appreciate it. And DG, of course, for everybody out there, is Dollar General. So let's look at that right now. It's let me pull it up. Oh, goodness. There we go, Market Smith. So I'll have this up in just a second. I'll have this up just in a second when I get all the buttons going correctly in the right direction here. And let's look at DG. There we go. Okay, well. All right, Dollar General. We're going to pull that up right now. Pull up the chart for Dollar General, DG. Here it is, DG. Well, we're coming right into the earnings, aren't we? Okay, well, that looks good. Looks good. We've got 1 day to go for earnings. We've got 1 day to go. So I probably will be selling it tomorrow. I will be selling DG tomorrow, probably about midday or so. I'm going to be selling it. I typically don't like to hold them through earnings. It's just me because, now the thing about DG is a little bit slower moving than some of the other stocks we have here, but that is absolutely correct. That is a good thing to do, is to sell it before earnings, because, as Jesse Livermore, who was a very famous trader, once said, why do stocks typically go down after earnings, even if they're good earnings? Well, that's because in the price before earnings, that's when all the prices are baked in. So let's look at the chart to see kind of how well I'm doing on that DG trade. So let's pull it up to the small portfolio. This is the portfolio that I'm trading for everyone, so everyone can see. And it looks like Dollar General is only gone up 3%. Well, okay, I've held it 9 days. I can't be too, it's okay, but it's nothing great. I'll probably get rid of it tomorrow, and I'll make a little bit of profit. Not a lot, but you remember, this is both an incremental game and a game of, moving up. So I've been able to replace it with NIO, that's done a little bit better. So I'll look for something to replace it with. I got plenty to replace it with. It will be no problem to replace DG. I have, let's see what I got on trap here to possibly get. Okay, I've got CRISPR, which is on deck. Kind of like my baseball analogy here. It's on deck. It's ready to go. And that's probably what will be replaced from DG. I'll probably be selling DG tomorrow, but thank you so much for that comment. That's really good. That's how I trade them, and I so appreciate, I appreciate that. That is the question. What do you think of Genius stock? Well, I've never been a fan of this one. This is sort of I would say this is a Robinhood stock. It seems to making its rounds on the bulletin boards. I can't get into this one, and I'll show you why. Let's take a look at the chart for Genius Brands. Well, it's going down, and then it went up, and then it's going down. Never buy a stock in a downward trend. Just don't do it. It's not good. So it may be $1.09, but you know what? You could buy this thing. You could buy 1,000 shares of it, and it could go to 90 cents, and you would lose some money. So not a good time to buy it. It does have a very strong RS rating, but look at that. People are selling it. So this is kind of a classic pump and dumper. So sorry. If you got this thing, I don't think you want to be in it. I just don't think it's going to be in it. So, hey, Harris, thank you very much. Thank you very much. I appreciate that comment so much. And let's see, questions for people on TikTok. Thank you for being so patient with me, going through all my stuff. I appreciate that. Would you buy Delta? Not on your life would I buy Delta. Let's look at the Delta chart. Let's understand why we don't want to be buying those airlines. I don't know if you heard this, but this morning, American Airlines, which is based right here actually it's in Fort Worth, but in Dallas, because Dallas and Fort Worth are two cities that are pretty close together, they're going to be laying off 15,000 people. No, they're not coming back either. So Delta Airlines is not a good bet, and it's not a good chart either. Let's look at this chart. Wow, it's in a downward trend. No, Delta Airlines, United Airlines, American Airlines, Spirit, JetBlue, the name of sorrow goes on and on. It's a long list of sorrowful companies. Don't buy any of the airlines. You're not going to make any money in them because of this COVID thing. People just aren't traveling, and airlines make money when the airplanes are full. And right now the airplanes are not so full. So, maybe it will come back. Maybe, there may be an Easter bunny too. So you never know. Don't buy it. Really, in my opinion, don't even think about it. It's right now. It's not good. Work. Okay, now Work is an interesting one. That is potentially a very good stock. So let's look at Work. WORK. And Work is, of course, Slack. We all know Slack. The thing about Slack, though, is Slack is getting a lot of competition from Microsoft Teams. Now, I think Slack is the better product, but it doesn't really matter because it's it's Microsoft, and Microsoft can steamroller companies. Unfortunately, this is not a chart I would buy because it's moving in a downward trend. The number one first thing that you do when you look at a stock is open up that stock chart. And by the way, you don't have to use professional charts like I do. You don't have to. You can use Yahoo Finance. It's actually very good. You just go to finance.yahoo.com. Open up the stock that you think that you're going to be buying. Take a look at it. If it's going from the upper left-hand corner to the lower right-hand corner, stay away. It's just not worth it. Why catch a falling knife? You don't have to do that. You just don't have to do that. So this is not a buyable chart for Slack. I like the company. I just don't like the chart. So let's take a look at NOG, N-O-G. Let's look at that. Oops. Let's bring that up. NOG, N-O-G. All right, NOG, Northern Oil and Gas. Another horrible chart that I want to show you right now. Not a chart that I would buy. And why wouldn't I buy it? Well, when it goes from high to low, I don't want to be low. As a matter of fact, the RS rating on this is a 2. That means that 98% of the S&P 500 stocks are doing better than this one. This is a true dog. This is a dog. As a matter of fact, this is a dog with fleas. I think I can see some fleas here. Don't buy this one. Terrible, terrible stock. Now, I'm not trying to be. This is not a criticism from anybody. Please don't take this. This is purely looking at the stock, purely looking at the chart, and discerning from that. So don't take this in a bad way. But this is just a bad. This is a bad stock. You don't want to buy it. It's a bad chart. You don't have to buy bad charts. You can buy great charts. And if you get the link to the small portfolio, which is so easy to do by going to www.studyingfloor, I have a watch list that I am maintaining that will help you pick stocks that may be better than this. So let me just kind of show you just kind of what you'll get if you go there. And by the way, this is all free. So, you know, this is the best free stock advice that you're going to get because free. And, but here's the stocks that I'm watching right now that are on my watch list. And several of them are in buy zones. CRISPR's in the buy zone. That's nice. Also, Skyworks is back in the buy zone. That's kind of cool. Barrick Gold, believe it or not, is in the buy zone. Applied Materials in the buy zone. And OTEX is in the buy zone. So all those in the buy zone. So instead of dealing with a, stanky stock like like Northern Oil and Gas, why not get a good one? That's just my opinion. Why not get a good stock, which is so easy to do? Can I hold Apple? And you can hold it. I will not tell on you if you hold it till Friday. No, actually, holding Apple is a very good idea. But I would recommend, and it doesn't always work this way. I don't have a crystal ball by any stretch of imagination. As I tell everybody, I am the ultimate outsider. I have no insider information at all, zero. I look at the charts and and that's what I am basing this off of. I'm not basing this off of any insider information, any secret handshake. I don't have those. I don't have that capability. There's people that do that, and they usually go to jail, by the way. I don't have any insider information. I have no secret handshakes. I didn't even go to the right schools. So I'm not the one that has that. But what I do is have the ability to read charts, and that's kind of a good thing because it's very hard to fake out a chart because the chart only records several things: the price, the volume, and the time frame horizon. So that's all it really does. So long story short, I think that you definitely could hold the stock for Apple until Friday. I would sell it and wait to see how it trades through the stock split because typically it will trade down after the stock split. Will it 100% do that? No, I can't guarantee that. But there's a very high likelihood that it will once it splits on a split adjusted basis. By the way, I want to be very clear on this. Obviously, when it splits, it will be worth a fourth of what it was per share that it was before because it's splitting 4-1, right? But it also will move down because there will be some selling pressure as people rebalance their portfolios. Now, how long will that last? I don't know, but typically it's about 4 or 5 days or maybe 2 weeks. But I would sell it and then I would buy it back. And I think you're going to be very happy if you do that. I think you'll do very well if you do it that way. So, okay, next question. Are you expecting Nasdaq to reverse or fall? Well, it always will change direction. The one thing I can tell you about this is that the market will always change direction. The question is, which direction? Which direction? How is it going to be changing? Well, let's look at the let's look at the S&P 500. Let's look at that chart, because that's going to be the tell to see if, well, actually the Qs are going to be the tell to see if the Nasdaq is going to be reversing. So let's look at that. Well, here it is, and I'll put it up here for you. Basically, no. In a word right now, no. At least not until later on. And why do I say that? Well, I'll show you. I'm going to show you another chart. This is of the QQQ, and this chart basically is going to show us some very interesting things that we can infer from this how the market is going to change in the next few weeks or months. And what this is this is the QQQ investment trust, and this covers the Nasdaq 100. So let me show you the chart, and then I'm going to show you why, what's going on. Now, do you see this red line here? This is called the 50-day moving average. There's this black line. It's the 200-day moving average. Now, I'm on the weekly chart, so I'm showing it by the week. If you see, the last change in direction was, interestingly enough, about February, the third week of February. Well, that's exactly when we started to go into the pandemic recession, the flash recession. And what happened during that time? You see how there was a change in this 50-day moving average? It started sloping down. Okay? And then when it went down through the 200-day and then moved back up for it, that meant a change of direction. It doesn't exactly follow it, but looking at this chart right now, the characteristics of this are it's going to move higher. Now, is it going to pull back from time to time? Absolutely. But right now, the QQQ, the Nasdaq 100, is going to move higher, at least through the election, it looks like, based on this chart. Now, can I be 100% sure? No. But I'm about 80% sure. So that's pretty good. That's pretty good in this. Okay, so do you like Big C? Big C. Wasn't that a drink at one time? I remember that being Big C. That's a store. I'm not really that excited about most of the retailers, to be honest with you. This is Big C Hiding Commerce, provides cloud-based e-commerce software to retail merchants. Okay, so this is kind of like a Shopify. Well, I do actually, believe it or not, have an RS rating of 94 and actually have a buy rating. Wow, this is unbelievable. Let's look at the daily chart just to see if we can see anything there. I actually have a buy point. Can you believe it? I wouldn't have said that, but here it is. There is a buy point on this one. Wow, okay. It looks as if we have a bona fide buy point. This is not a chart I would buy, by the way, but it is buyable. It looks like we have a buy point at 84.50. 84.50. What is it selling for now? 140? No. This is buyable, but wait until this has a better pattern. This has only been out for less. Here's the thing about IPOs. Don't buy an IPO until it's been out there for at least 3 months. You want to see at least 3 months in order to buy an IPO. It's just too hard to buy them right out of the box. And this one isn't there, but it's definitely watch listable. So I really appreciate that for High C. I wouldn't have seen that one. I'm not following it. But that's a good one. That's a really good one. Okay, what is the buy point for NIO and LI? I'm currently not in LI, but I am in NIO, believe it or not. The buy point for NIO, let me give you the buy point for NIO here, because I actually have it right here. The buy point for NIO is 15.55. So that's a while ago, unfortunately. Unfortunately, I had to double up on NIO. It moved so quickly. I had to buy it in rapid succession. I normally don't do this. I normally go in with one position, I wait. But yesterday, I had to buy NIO because of the way it was, the action on it. So I went in with a full position, which in this small portfolio is only 50 shares. And then today, the action, I had to come back in. So I bought it extended, 17.23 and 19.18. But this is extended from its buy point. Its buy point is 15.15. So that is the answer there. Now for LI, I will get you a buy point on LI just really quickly. And let's see what I can do on LI. LI Auto, this is another one of the Chinese ones. You know, these are hard to buy. I just don't know. Okay, I have, believe it or not, everybody, I've got a, a buy point on LI. I'm not following this one. I'm not in it. I wouldn't buy this one. It's a little bit too, too much for me, but the buy point on is 1990. It's currently selling for 23.60, which is a bit extended, but it's, if you want to take a risk, it's buyable. It's buyable right at 1990. It's buyable right at 1990, and there's a lot of action on it. So that might be one that you want to go into. I'm not in it. I'm in NIO, which I think of the Chinese manufacturers, at least from what I can see, is the better of the two. I tend to be very leery about Chinese stocks in general. I don't generally buy them, but the chart pattern was so compelling on NIO, I had to do it. I just had to do it. Now, I may regret that, but I did it, and I did it yesterday and today. Bought a position. I'm in 2 positions. The maximum I'll ever go on that would be 3 positions on that. But there you go. There you go. So what can you say? Let's see. Next question. I hope I'm getting to everybody. Wow, we've gotten a lot of people to come on. I'm so glad that you're taking a look at me here on both on TikTok and on YouTube. And by the way, I'm also on Periscope, pscp.tv/Dallas Trading Floor, and I'm also on Facebook. And I'm on Twitch, twitch.tv/Dallas Trading Floor. And I am also on TikTok. So everybody, now I'm not at Dallas Trading Floor on TikTok. It's @JKMALONE. And I got a lot of people that watch me on TikTok. So let's take a look. Another question on TikTok. That and enormous short squeezes are what driving. Yeah, I think you're right. I think you're right. There's going to be some big short squeezes on Tesla. You are right. Typically what will happen, there is going to be probably a short squeeze on Tesla right before the split. That's usually what happens. It's what they call a blow off top, and you can make money on them. And basically what you do is you get in them, you move that stop loss up, boom, 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 boom. I probably am going to do that. I'm a little bit too late today. I will probably do that right into the earnings. I'll probably buy some. I'll just move that stop loss up and then get sold out. So I'll probably take a little bit of money there. I've got a lot of dry powder right now, so I'm getting ready to do something kind of like that. But there is probably a big short squeeze that's going to happen. And for everybody out there that doesn't know what a short squeeze is, what it is people will foolishly borrow stock in a rising market and then sell it and then hope to buy it back at a cheaper price. But when they get a margin call, they have to go in and buy it at the market price. And this is what causes the blow-off tops. And I think we're definitely in a case like this with Tesla. Apple, not so much, but Tesla definitely. Now, Apple probably will trade more the way I'm putting it out there. Tesla may peak really, really high. I just don't know. With Tesla. I wouldn't short Tesla. Tesla is just a bear to short. And you don't want to short any stock in a rising market. You just don't. It's just not a wise thing to do. You don't want to do that. So that's my take on that. So thank you very much. Thank you for. Do you think Apple will go up after the split, or will come down lower than $500? Please answer. Thank you. Well, here's what I think is going to happen with Apple. Apple currently, and let's look at the chart for Apple because that's the only way we can really tell, is by looking at that chart. And let's look at the daily chart on Apple and see how it's trading. So here I'm going to push that up here, and there is the daily chart on Apple. We're moving up, and we're right about 500. We're 505.85. It's going to split 4 for 1. So that means that if it were to split today, the shares would be worth $126, right? Well, on a split adjusted basis, what I think is going to happen is that we're going to see it split. Now, probably it's going to split maybe this price, maybe a little bit higher, who knows. maybe at 130, or who knows where it's gonna end up. But I think that once that split happens, and that's going to be on the 31st of August, I think we're going to see it trade down a little bit, and then it will trade back up from there. Typically, that's how it works on the splits. That's how they work about 80% of the time. So that's why I'm trading it like that. Okay. Let's see. When do you think Tesla will move? Well, it's moving now. It's moving strong. It's moving right up into that crescendo. But if you're buying Tesla right now, be very careful, because it can snap back and snap back hard. And Friday is a options expiration day. And typically stocks will pull back on options expiration day. So be very careful about that. It might be something that you want to look at. Okay, Walmart is a buy or sell. Well, okay. Well, let's see if it's a buy or sell. Let's see if I would buy it. It's never a buy or sell, because that's subjective for you. But would I buy it or sell it? Let's look at what I possibly would do, and that's WMT. And Walmart, of course, is the biggest store in the world. And let's look at that daily chart. No, I don't think this is a buy or sell. I wouldn't buy this right now, anyways. I wouldn't buy this right now. This is too messy of a chart. The buy point on this one, I would not buy this one until, the buy point on it is 131.99. So I'm going to put that out there on the comments. So WMT pivot is equal to 1, let's look at it. 131.99. 131. Oops. 131.99. So that's the pivot for Walmart. Where is Walmart trading? Well, it's trading right below the pivot. So maybe this might be a legitimate pivot. So I don't know. I don't know if I could buy it or not. It just looked like it's right on the cusp. Let's break out. Lower up. No, I wouldn't buy this one. And why? And I'll show you why. Look at the relative strength rate. It's going down. Also, we had earnings, and there was a big sell on earnings. This is why, everybody, coming into earnings, you want to sell the stock, because earnings, usually it trades lower after on the other side of the earnings. So just that's what I think is going to happen. I wouldn't buy Walmart. Just doesn't look like the right time. I'm not saying forever, but at least for right now, I don't think that's good. Okay, wow, great, Grandpa Paul, love it. AMD, I like AMD. AMD is a terrific stock, and it's been top rated the whole year. This has been the year for AMD. I mean, for years, AMD it didn't do anything, but all of a sudden, it is just doing fabulous. Okay, let's look at it. Looks like we have a bit of a formation. It's a little bit early, but we have. I wouldn't buy it unless it was higher than 87.29, and that's not a real buy point. But it's pulled back a little bit today. It just. I want to wait. I want to wait on this one. This is a watch list stock. It's not ready to buy yet. It's not ready to buy. This chart it's good, but it's not already. It's not a good time to buy. The last buy point on this one was back in it was back in May, and the last buy point on this one really was at about 58.63 on Walmart in a very nice cup base without handle. So yeah, not the time to buy if you're in it, that's great. If you're not, it's just don't wait for a better pattern. Wait for a better pattern on this one, and you'll be fine. But not a place to buy it. Okay. Any thoughts on Splunk? SPLK. Now Splunk has been doing great in the data space. It's a database it's data analysis company. And so it's a very interesting stock. It's a very interesting area of the market, very fast growing. Um, it is definitely very extended. It's above the profit taking zone, but boy, oh boy, it is due. Okay, EPS are due. Okay, here's the thing. It's gonna. Okay, here's the thing about Splunk. I want to show you this chart. Don't buy it until it comes to earnings. Earnings are this afternoon. It's going to announce after earnings, after the bell. This may be a buy on tomorrow, but wait until it declares earnings, because see how it trades in the first 30 minutes of trading, because this thing is likely to trade down a little bit, but this is extremely strong in terms of volume. It's up tremendously on volume, and it's a gap up. So this might be a very, very, put this on your watch list. Matter of fact, I'm going to put this on the watch list for the small portfolio, because this is a very, very, very good sign. It looks like it's gapped up, and but it's earnings today, so don't buy it until it comes to earnings. But this may be a very, very good buy. This is an excellent call. So appreciate this, Thomas Garcia. So appreciate it. I do think it's possibly a buy after tomorrow, but wait until earnings. See how it trades in the morning. I think earnings looks like they're going to be blowout on this, and we could see some tremendous action on this. Interestingly enough, almost 58% of the owners of this stock are funds, so this has got a lot of really good characteristics. It's also looks like it's in a first stage base. Wow, so this is good. Splunk, put it on your list. It's probably a buy tomorrow morning. So, I mean, who knows? But tomorrow morning, I think that might make some sense. And I'm going to put that on my list. I definitely am. That is excellent. History after splits. Well, let me show you typically how splits trade. And I've been showing this for a lot of people, but I think it really bears some examination, some more information here, because I think it's important. Here's how they typically trade after the split. This is based on Tesla, but there's other ones too. As you can see my slides here. Typically, what will happen is that coming into the split, this is when before the announcement, this is when it's announced, and then it will trade like this and trade down. And this is exactly how Tesla traded, by the way. And then it'll start gathering steam, and we're right about here right now. The 27th and 28th typically is where it's going to make its peak. Then on the 31st, it's going to come through this peak, and then it's going to split, and then typically it will trade down. Now, the question is, how long will it trade down? And you just don't know how long it's going to trade down. But typically that's a week or almost 2 weeks. It can be as long as. It's going to be as long as a month. But typically we trade down. But once it starts trading down, watch it. And then when it starts to move upwards, and it will, that's when you want to buy it. And then, just buckle your seatbelts, and, you may end up doing extremely well if you trade it like that. So that's my, that's my view on it. That's a view on it. So here we go. Here's another one. ISRG. Okay, let's look at ISRG. ISRG. And, Intuitive Surgical. Yeah, I know this company. This is a really good company. It's a very expensive stock, but remember, if you're doing position trading, it doesn't really matter how expensive the stock is, because you can buy just 1 or 2 or 3 shares. How do I like this one? It's got a tight pattern. It looks good. It's above the buy point, but it's coming off a cup and handle. It's not going to break out. Doesn't look like, at least, but it's a little bit extended for me. I probably wouldn't go into the one at this level. At this level. Not that saying it's a bad chart. No, but the pivot on this one was about 601.21. So, and we're currently trading at 699. So we're a bit extended. I would wait for another pattern to form on this one. I would watch this one. This is a terrifically good stock, but I don't think it's time to buy it right yet. Now, does that mean that if you bought it now that it would be the end of the world? No, but I personally wouldn't buy it at right now, because it just doesn't have exactly the right chart pattern. And there's so many good stocks that are setting up so well right now. Why buy a bad chart pattern when you don't have to? Just buy the best, and you're gonna get some good. I told you about. You know, I didn't buy any of this yesterday. I may buy some this week. I think that's fantastic. And by the way, for everybody, this is a ETF, and it's like the TVIX, and but it tracks the FANG, and I think this is this is a tremendous thing. It's been moving up tremendously fast. So that's a very good suggestion. I so appreciate it, and I may be in that. So you never know. The VXX is climbing. Now the VXX. Let's look at the VXX. Yeah, this is the VIX. You know, actually, you know what this is telling me? This chart is that we are seeing volatility actually move down. Can you believe that? But it is, according to this chart. This is what you want to see on the VIX. You don't want to see the VIX going up. You want to see the VIX going down. And right now, it's pointed downwards. That means less volatility. That means higher stock prices on less volatility. Boy, you can't get much better than that. That's really good. You know, and that just doesn't happen all the time. I mean, it's very interesting. So I want to take a look, because that's a very interesting thing that you brought up there with the VXX. The VXX is you know, is basically the VIX is basically a indicator of the volatility of the market, but it is a psychological indicator as well. So I want to show you a chart of the VIX right now so we can get a kind of an idea of how it's trending. And you notice that stock, the VXX, I'm going to show you the actual VIX itself, not an ETF, to see how that's trending. Well, as you can see, it's almost exactly the same. So right now, there is a little bit of an uptick here, but primarily the VIX is trading lower. So that's good. That means less volatility. So that's very interesting. The VIX is probably the issue that you have there with this. You can see it almost mirrors it exactly. And this is the ETF that tracks this particular index, and that's what that is here. So right now, this is not a particularly good investment, but it's good for everything else, because this means we are getting less volatility in the market right now. So that's kind of interesting. I mean, we're going higher on less volatility. Wow, it doesn't get much. That is just a great idea. And I will definitely show you the chart on FNGU. So that's a little bit different one, because that tracks the FANG. So let's look at FNGU, and there we go. And boy, look at that. You are absolutely right. Look at that chart. Wow. So I'm going to show it to everybody here. It is fabulous. And there's a buy point on it too. Wow. It's got a relative strength of 99. Wow. This is incredible. Maybe there'll be a pullback tomorrow, but it looks really strong. The volume is above the 50-day. That's excellent. Wow, this is really a good one. This is a watch list. I didn't go into this yesterday. I had some folks come from New York today, some people that I'm training on how to do CanSlim investing, and it was a lot of fun. We had a little thing, so I didn't get to that today. I've just really been kind of training, and you'll see it. I'm going to put up some other videos on the folks that came, and hopefully I'm going to show you kind of, I'm going through it with them. These are younger people, under 20, and they're all trading, and they're doing well. And they came in from New York to visit us here at Dallas Trading Floor, and it was a lot of fun. I went through some just basics, and they're very smart. So what can you say? Very smart. I wish I had started that early. Man, I probably wouldn't be doing this now. Actually, I love doing this. So what do you know? Bought NIO today. Your opinion on holding period. Okay, here's what I would recommend for NIO. And this is why I have it on my small portfolio, because I know a lot of people are interested in this one. Now, normally I don't like to buy stocks like this, to be honest. I'm not a big Chinese stock fan, but I just couldn't resist the chart. Here's the chart on NIO. All right, so what do I, how long should you hold this or whatever? Here's what you got to do. You got to track the profit. If consider selling it if it goes up more than 20% from where you bought it. Now, NIO is going up so quickly that you might want to hold it after that. Now, the normal rule is if it takes more then 8 weeks to go up 20%, you want to start selling it, okay? But if it goes up 20% in 3 weeks, you don't want to sell it. You want to keep it. So what you do in this case is, with your stop losses, as they move up, push them up, okay? Push them up on this one. This is how I'm trading. This is how I'm trading NIO right now. Now, I bought 2 positions, and again, this is really for demonstration purposes, and this is correctly sized to about kind of where everyone's at. All right, so I bought 1 position, if you'll notice, 1 position, 50 shares, and I'm up a little bit on this one, 19% in 2 days. That's pretty good. Wow. I bought it. This was strong enough, so I bought a secondary position of 50 shares. This is also 1 full position. That's up about 7%. So this is moving up so fast that what I did is I set my stop loss and I moved my stop loss higher. And in this particular case, because it's moving so fast, what I did was I set the stop loss 5% below the top where it's trading right now. And currently, NIO is trading at about, let's look at the number, it's trading at $20.43 a share. So if you take $20.43 a share and you multiply that times 0.95, you're going to get the number where I put the stop loss. And so with a fast-moving stock where it's moving up like this, you want to put that stop loss in, you want to move it up, and then as it gets closer to the top, that's when it will pull back, and then you'll be sold out, and hopefully at a lot of profit. And that's the whole idea here. We want to capture the profit that we can. So thank you for that question. Very, very good. Very, very, very good. All right. So short Tesla and Apple on Monday. I don't know if you want to shorten this market. I mean, normally I would say that, you're onto something here. I don't think you want to shorten this market. This is too powerful a market. Don't short it. Wait for it to come down and then buy the underlying shares, and then wait on this one. I wouldn't short it because, and why wouldn't I short it? Well, in a market that is going up like this, with the S&P 500 going north, with the spider going up, with the QQQs going up, this is just a very, very dangerous market to short anything in. Now, a lot of people have shorted Tesla, and that's one of the reasons it's moving up so quickly in these last few days before it splits. It's because a lot of people are having to do what they call short covers. And that, unfortunately, for the people that are having to do it, it's costing them a lot of money, but it's pushing it way up. Now, once that buying pressure is removed, it will move probably lower. Now, is it 100%? No, but there's a very high likelihood that's going to happen. So I wouldn't be a short on Monday because, Tesla, people have lost fortunes shorting Tesla, just to be frank. So I wouldn't be a short on it. But I would be getting ready, get my dry powder ready, getting to move in as the thing moves down. And then once it's moved down, and then once it starts moving back up, that's when you want to be in it. So thank you for that question. Very, very good question. Netflix. I love Netflix. Netflix is one of the FANG stocks, as everybody knows. The reason Netflix is so powerful is because the movie studios are basically dead in the water without Netflix. They can't release any new movies. No summer movies to this moment because of the pandemic. They're having to release them on Netflix. So Netflix is the only game in town. That's pretty good. Look at this chart. It's just stellar. It's just a gap up today. Wow, Kazawa. You know what? And I sold my Netflix. I made a lot of money on it, so I can't be complaining. But wow, look at this thing. It has just moved tremendously higher on high volume. This thing is going to go much higher in the future. Netflix. 547. Wow, could this be a split? We don't know. It may be. It may be. It's just fantastic. Okay. So, what are your thoughts on LCA? Let's look at LCA. It's a blank check company. No, here's the thing. I don't have any thoughts on. Here's the thing about companies like this. I don't have any thoughts on these, and why? Because they're not really companies. They're just a fund that's looking to invest into something. So take this with a grain of salt because we don't know what it's invested in yet. We just don't know. So that's my opinion. It's blank check companies are just funds that are going to buy something else. They're not real stocks. They're waiting for investment. So that's kind of my take on a blank check company. Will UMC come back? I don't know. I was in UMC. I didn't like it. I sold it. I sold it when it went down 4%. I just like, no, I can't handle it. And it looks like I was right about that too. Wow. It's amazing. Yeah, it just doesn't look. Now, this is, you don't want to buy a chart in this chart pattern, and there I was. I was buying it. I was buying it right up to, I basically bought it, and I sold it. I mean, I got out of that puppy. So let's see how I did on that one. So let's look at that. This is one of the ones I sold. This is one of the few I lost on. No, I'm sorry. No, I didn't. Obviously, it's not in here. This was when I was trying things out. But yeah, I did have this one. I did sell it, and I did sell it at a loss. I sold it about a 4% loss, and I sold it right before. Well, no, I sold it. I sold it right in here. I didn't wait for it to move up. I sold it right before earnings. Here, yeah, I sold it right before earnings. I did lose a little bit of money on it. I bought it because I bought it here, and then I sold it right before earnings. But I did sell it, and I've got to keep. I've got the records for last month, but on this one. But yeah, it's not going to go back up for a while. So you don't want to be in it. It's just not. You don't want to buy a chart that looks like that. You just don't want to do it. Not that you can't make money. It's just that, well, you can make money on other things, and it's much easier to do. So, okay. How is SPTN? SPTN. Wow, SPTN. Let's look at that one. Smart International Company. Supermarkets. It's okay. It's okay. Let me show you a better stock. It's Kroger. This is okay. $20.89. It's a high volume, low margin business. Not particularly my favorite. Supermarkets are the new restaurants because nobody is going to restaurants. But I think the one that you probably want instead of that one, and it's not that much more expensive, and that's Kroger, KR. So there we go. There's Kroger. Yeah, you want to buy Kroger, not this one. And Kroger is not that expensive. I mean, it's only a $38 stock. And it's moving right up nicely. And so that's the one you want to be. It's still in the buy zone. It just moved slightly out of the buy zone. It's just slightly extended. If you're going to buy a supermarket, buy Kroger, KR. KR. I'm out of the supermarkets right now. I'm not in Walmart. I'm not in anything. But if you are looking at a supermarket, and they are good safety plays, Kroger is pretty good. When are you selling Facebook and Microsoft? Well, I am probably selling Facebook and Microsoft when they achieve a 20% return. I'm probably selling them. Now, with Facebook, it's moved up a lot, and I'm moving up my stop loss on Facebook as we speak. Facebook seems to be doing really well, and I have 2 positions in Facebook right now. The funny thing about Facebook, I have bought and sold Facebook, God, at least 20 times this year. I've always made money on Facebook. Facebook has just been the cash register, the gift that keeps on giving. So I really like Facebook, and I'm probably selling it when it's up about 20%. That's what I'm going to do. That's what I'm going to do. All right. Question on MDB. MDB. I know that symbol, and I can't recall it. No, I guess I don't know that symbol. Develops and sells subscriptions to modern general-purpose database platform. I don't really know this company. No, I wouldn't be in this one. It's below its buy point. Nope, I wouldn't be in this one. Not for me. Not for me. Wouldn't be in this one. Thoughts on Roku? Roku I like. And the reason I like Roku is because anything that can distribute movies when there's no movie theaters, I'm liking. And it gapped up. Boy, whew, look at this. All right, here's the chart on Roku. And by the way, I have a Roku at home. It's the 3rd one I've had. It's great. It's really not in a buy point, but it looks like it. Yeah, see, this was bought. Everybody's buying off the 50-day moving average. There's really 2 ways to buy a stock. One is as if it's in a base like a cup with handle, or a cup, or a 3-week tight, or a double bottom, or those kind of things. So that's the best way to do it. The second best way to do it, though, is when you have a stock like this that's been in a tight formation, it pulls back to the 50-day moving average, and that's exactly what it did, and then wham, it went right up. Look at that. Look at this volume. It's terrific. I have to say, Roku's good. Roku's good, even at 164. It's just right at the pivot. I mean, and yeah. Roku's good. This is probably going to go higher. So thank you for that question. I definitely going to watch this Roku. I have owned Roku on and off. I don't own it right now. So very, very good question. All right. How do you make stop orders? Market, limit, or trailing? Well, I have my opinion on stop orders, and I trade with stop orders all the time. My opinion is you should only use a market stop order, and you shouldn't use the trailing stop. You should be adjusting your stop losses frequently. And the reason I like the market ones is because if it violates the activation price, you are sold out at the next bid, and that can mean a huge difference. If a stock dives and it falls out of the sky, and they do every once in a while after bad earnings or something like that, you can see them go down sometimes 10, 15% in a matter of minutes. Actually, that's why you want to use the market stop. And of course, when you buy a stock, the first thing you do is you set your stop loss. And the way you do that, of course, is you take the price that you paid, multiply it times 0.93, and that gives you the number where you set it. Set it good till cancel. So thank you for that question. Very, very good question. BERY. BERY is the is the question. Berry Global Good. What do they do? Makes plastic consumer packaging. Okay. This is a weird stock. It looks like a bounce stock. I don't know. I think there are better ones than this. At 55.50, you can get a better deal than this. The last buy point on this one was 49.16. It looks like it's right above the buy zone, but I don't like the way this is trending. It's trending down. If you want to be in the stock, wait until it hits the 40-day moving average, because it looks like it bounces right along the 50-day moving average. And the 50-day moving average currently is about 48. So I would wait until it goes down to 48. It bounces, moves higher. That's when you're buying, not before. So that's my take on Berry. Let's look at the last. We're almost to the end of the hour. Will you have a crash buys? Well, I do, by the way. I do put out action trade alerts when I'm trading something that I think is really significant. And let me talk about those just for a second as we close the show. And easy to get on those trade alerts. Totally free, by the way. All you have to do is go to DallasTradingFloor.com and put in your information, and you'll be right on the list to get those action trade alerts. And if you're looking on TikTok, super duper easy. All you have to do is go to my profile, hit the link. You'll be taken right to the sign up page. It's free, and you can subscribe, and it's got all the good stuff. So I haven't put out one this week. I'm looking to do several, but I haven't done either. But sign up for them, and you'll be getting the action trade alerts along with everyone. So I have the last questions on TikTok. What do you think about NCO? Okay. Let me take a look. Okay. Do you use debit spreads or you buy the stocks? All right. Well, I use both. That's a very good question. I typically, when I'm doing earnings, when I'm going through earnings, I like to do the options plays, and I put that on the action trade alerts. So to show you how I'm trading those, all you have to do is go to DallasTradingFloor.com. And I will put out the spreads on that, because spreads are a great way to play through earnings, because earnings typically will move a stock typically down. And so I like the bear call spreads through earnings. I have done very well with those over the years. So that's a way to play it. So everybody, I'm going to be back tomorrow, 2:30 on YouTube at youtube.com/DallasTradingFloor, and also on TikTok at TikTok and the @ symbol JK Malone. That I'll be there too. And so I look forward to seeing you on the other side, 2:30 tomorrow. And happy trading, and do get on our list for the action trade alerts.